Let's take a look at where we're sitting right now for dollar yen. We are down by nearly 0.5% at 91.38. Euro dollar is sitting at 148.15 even. And the Aussie dollar, as I mentioned, did get a very mild and very quick jump straight after the CPI data, but is now rested back to the downside at 91.35. Derek Kowalczyk is Chief Investment Strategist at SJS Markets, and he joins us now live from Hong Kong. Derek, always good to see you. First of all, what did you think about the CPI number from Australia, and are you also paring back your expectations in terms of how aggressive the hike might be next week from the RBA?
Australian inflation indeed was largely driven by gains in utility prices. But the key point for me is that the trimmed mean CPI, which is targeted by the central bank, remained above 3%, which is the upper end of their target range. And this implies that they have to continue raising interest rates, otherwise the target will slip further away. So I believe that they will gradually increase rates at each of the next several meetings. But in November, it will be only 0.25 percentage point. I did not expect more, simply because the economy is not growing fast enough to warrant a more dramatic tightening.
Indeed, one of the other things that Treasurer Wayne Swan was saying just in that speech a moment ago is that overall inflation pressures are continuing to ease, which I thought was quite interesting. What do you think would be a neutral setting? Where do you think eventually the RBA might end up in terms of this hiking cycle?
I think that a year from now, the target rate will be around 5%. So substantially higher than current levels, but well below the peaks before the crisis has begun. The big picture here is that the Australian economy is going to accelerate, but it will not be red hot. And towards the end of 2010, both Australia and the rest of the world, I think, will go into another slump as fiscal stimulus packages in countries such as the US and China and private sector demand is unlikely to pick up the baton. So tightening will continue for the next 2 to 3 quarters, and then it's likely to pause in order to sort of take care of the private demand and make sure that the decrease in fiscal stimulus doesn't really push economies into another recession.
Okay, thank you very much for joining us with that quick commentary on the Australian market, the Aussie dollar and the economy. Derek Kowalczyk from SJS Markets. Coming up.